Hi, everyone. Thank you so much for joining us today on our webinar, Helping Business Owners Find and Win Capital. My name is Kathleen Rourke, and I serve as the Director of Engagement for People First Economy. People First Economy, alongside Detroit Community Wealth Fund, the Center for Community-Based Enterprises, and Michigan Center for Employee Ownership, are part of a collective through MEDC's SSBCI Technical Assistance Program. SSBCI stands for State Small Business Credit Initiative. So as we're talking about SSBCI, that is the program we're referring to. And the goal of that is to provide capital for very small businesses and socially and economically disadvantaged individuals as defined by the state of Michigan. We're super excited to be jumping into the topic with you today. This is part of a two-part webinar series. So if you're not already signed up for the second part, I saw some folks signed up for part one, but not part two. I will drop a link in the chat so that you can make sure you have access to our part two. That's happening a week from today at the same time, so August 13th at 1 o'clock. We would love for you to join us for that part two as well. Our first session this morning is really going to focus on the State Small Business Credit Initiative, what's going on with SSBI, who's eligible to participate in it, what kind of lending and investment structures are available through the program, how to seek supports, and really how to get started. Our second session will have a little bit more focus on things like equitable succession planning models and different technical assistance supports that are available through our collaborative and through the program. And so we don't want you to miss that one. As we're jumping in, I'll just give a quick lay of the land for today. We have a couple folks on the call joining us to walk through this topic. Rachel Bakken, who is the Senior Capital Project and Portfolio Manager at MEDC, is going to provide a quick overview of the SSBCI program and its goals. Rachel will then be joined by Roy Messing, who's the Director at the Michigan Center for Employee Ownership. Together, they're going to unpack a little bit more about the program, kind of pull apart what iterations have been available and how businesses can take part in it, find value in it today. And then we'll have some time for a short Q&A afterwards. So if you have questions throughout today's call, please use the Q&A chat feature to ask those. I'll be monitoring that space. You can also access me in the chat. I'm happy to go back and forth on a few things and lift those questions up while we have some Q&A space. But I won't hold this back any further. I will stop sharing my screen so Rachel can. But Rachel, if you want to take it away and share a little bit more about the SSBCI program, that would be great.
Thank you. Thank you for having me. And hopefully this gives everybody a little bit of peek into this SSBCI program and get you started in the right direction. I am going to share my screen real quick, and I have, sorry, I had to move my head around to get to figure out where I'm looking at here. Got a few slides to show. And can you guys see my slides okay?
Yeah.
See if are they on there? Okay. Just make sure. And I'm going to drop these in a copy of this in the chat. So everybody will have these, and it's got direct links to the stuff that I'm going to ramble off, as well as my email and things like that you can directly click on. Let's see here. All right. Okay, so kind of where this all got started, as Kathleen was saying, SSBCI is the acronym that you'll hear, State Small Business Credit Initiative. This originally started back in 2010. At that point, they called it SSBCI 1.0 and rolled it out. And with these programs, states can apply for the funding, and then there's kind of rules within what you do with that funding to help small businesses. So back in 2010, for the first round, Michigan received about $79 million. We have since then used all of those funds, recycled it. The nice thing is once we put them out for businesses for support and they come back to us, they're considered recycled so that we can continue using them for the program or other Michigan programs where we feel like that those funding is needed. So the nice thing is this funding stays with the state. Once COVID hit, CARES Act came out, decided, you know what, we really could run this program again. And so that's when SSBCI 2.0 came out. And at that point, I think pretty much every state as well as U.S. territory, tribal nation, things like that, were all able to apply for funding. So this time around, Michigan has received or will receive $237 million. That's over the course of the next 10 years, starting from about 2 years ago. So our first tranche of funds was $72 million. At this point, we have expended just under 70 million at this point. So we're now ready to request for our second tranche of funding. You have to hit certain benchmarks and then we can keep getting our funds over the next 10 years. So the good thing is we have funding, we have more funding behind us to continue this program for a while. So like I said, we will expect some more, probably about another $75 million before the end of this year. And we're just going to keep things rolling. So one of the programs I'm going to kind of focus on today is kind of our biggest one, the one that we do the most of within this. And this is called the Collateral Support Program. This program is really, when we were looking at ways that we could help businesses, is what are some of the needs that we have that other programs don't fill. You've got SBA lending that fills certain needs and certain issues that maybe the lender has or the borrower has, we're trying to get over to get that funding. So when we took a look at it, we realized there's really nothing that helps cover if there's a gap in the collateral. There's things that help if there's an issue with cash flow or things like that. But if there's not enough collateral there, a lot of times lenders they're kind of stuck. They're like, we can't move forward. So that's where our program comes in to help lenders get over that hump and say, yes, we can do this project because we've got additional collateral from the MEDC. So we don't lend directly to businesses. We work with banks, credit unions, CDFIs, Farm Credit Services, any of those we can partner with. And basically, there are kind of the middle person between us and the business. So they're going to look at that loan and they're going to say, hey, we really like this business. We want to do this for you, but there's not enough collateral. That's where we come in. That's where we make sure our banks and our credit unions and all of our partners know about us and know to come to us if there is that shortfall in there. Because we can go up to $5 million for an individual borrower. And you'll see I've got a couple examples near the end. We've got one of our customers, I think we've done 3. I think we're on our 4th collateral support deal because we keep going up to that $5 million mark. And that can be a pretty large amount of support to throw out there for a business. We can never be the majority collateral in the deal. So if you've got something and you've got a loan, we can go up to 49.9% of that loan amount. We just can never be the lead piece of collateral in it. And so one of the big differences from SSBCI 1.0 to 2.0 is under 1.0, it was specific industries you had to be in order to qualify to do the program. Didn't matter the amount of the loan. The awesome thing about doing 2.0 is they recognize the need for smaller loans, and smaller loans opened up to any kind of industry. So any industry can be approved under this program if the loan amount is $500,000 or less. When we get over that $500,000 loan amount, then we are restricted to industries, which I've got. Sorry, I should turn the page on you guys. That would probably help. And you can see these are the industries once we get over that $500,000 loan mark that it kind of drills down to. But honestly, we have done so much support on loans that are under $500,000 this time. That's been huge. I mean, everything from, daycares to restaurants to all, everything in between. Now, no matter what size the loan is, use of proceeds is the same requirements for both. If it's real estate, it has to be owner occupied, can't be like investment properties or anything like that. Furniture, fixture, and equipment, and working capital. We can even do like an asset purchase for a business. So there's businesses we looked at where maybe there's a 2-part, there's all the equipment and the assets of the business that somebody's purchasing, and maybe there's a goodwill piece too. That's the part we wouldn't be able to do. We couldn't touch anything that has goodwill. We could help provide collateral for any of the asset part of the purchase. And we can help lenders support loans or lines of credit. And again, up to 49.9% of a new extension of credit. But if you have an existing loan or line with another financial institution and you're refinancing it with somebody else, we can look at that because that is considered a new extension of credit for that new bank or credit union. So just because you have something out there currently, we may still be able to look at it in a refinance situation. And I've got a couple very, very high level overview of two projects that we look at. So an equipment purchase, you've got a bill of sale and it's new equipment and it's the $1.66 million for new equipment. Bank says, we'll do it. We like the business, cash flow's fine. We'll go up to 90% of the cost of that. So that's where it gets to that $1,060,000 loan amount. So the hope is when you go to get it appraised, it'll get appraised for the full purchase price. Unfortunately, it doesn't always work that way. So in this case, the appraisal came in low and came in at $1 million. Still something that the business, wanted to move forward with. It was valuable to them. Unfortunately, a lot of times with banks and credit unions, they have to then do a discount from where the value is. So they will discount, say it's valued at $1 million, but we're only comfortable saying that that's really only worth $750,000. So there comes our gap. So to get to that $1,060,000 loan amount, and the bank is only showing $750,000 in collateral, that's where we're going to come up with that $310,000 in collateral. And for collateral, we literally put cash in a bank account tied directly to that loan. So obviously the banks and the credit unions are happy because they have extra deposits and it's specifically there. It's not something everybody can access or anything like that. But we will put that in the account and it is tied directly to that loan for as long as that were needed. Another scenario of that is a real estate purchase, very similar. You've got a lender who wants to do 90%. And in both these scenarios, then the business would put the other 10% in to get the full purchase price. It just doesn't praise out. And, the real estate market, obviously, over the last so many years has been very up and down. We've had some great appraised values come back, and we've had some that have been pretty shocking. And so then we've been able to cover a pretty large gap for businesses. And again, this one, we came in at $370,000 in cash collateral. And I put the percentage of support just kind of show you we can't ever be more than 49.9% of the loan amount for collateral. So just to kind of give you very rough ideas of where we could help when it falls into here. And then I've got just a couple examples, and like I said, I'm going to drop these slides into the chat here in a second, and you can click on the success stories, which gives you some more background on them. But this is an example of this is a pretty large wholesaler processor, the Superior Foods Company, but they were looking to expand and grow and needed a line of credit for it, but didn't have enough receivables inventory to help support that to where they needed to be to kind of get to that next level. So that's again where we can step in and provide support to cover that gap. And then this is the other one. 18th Street Deli has been a repeat customer of ours. We've done 3 collateral supports for them so far. And I know we've got a couple more in the works. So the nice thing is they keep adding up and we can still go up to that $5 million in support for them over multiple different loans that they're looking at. And this is, again, helping a company grow. Now, these are bigger examples, but like I said, I've gotten ones where we've done deals where it's a, $150,000 purchase of, maybe a small real estate or just additional piece of equipment that are going to be needed to grow that business. Our support is not tied directly to new jobs created. Now, some of the other MEDC programs, you need to have kind of that direct correlation of if we are able to support this much, we need this many jobs. Ours is not like that. We obviously want to create new jobs. We don't have set requirements that for every, 50,000 we give you have to create a new job. We want to not only create jobs if it's there, but we want to retain the jobs that are already there. So if our support helps retain jobs and keep things going forward, then that's a big win for us. So that's kind of the collateral support. I know I'm kind of running through this fast, and we can go back to these. And One of the other ones I wanted to touch on that through SSBCI funding is Michigan received a separate $5.2 million for this technical assistance program. And what this is it was then we had applicants, technical assistance providers, and the next page will show you who those are. And they are organizations throughout the state that have received funding from us, the MEDC, through the SSBCI program. And they are there to help assist very small businesses. You'll see, we love acronyms. So VSB with 10 employees or less, or SEDI businesses, which are socially and economically disadvantaged individuals. And there's a huge definition for that too, if anybody would like that specific definition, but it's pretty broad. But it helps businesses that fall in either one of those definitions as they're seeking collateral or seeking credit, whether it's an SSBCI supported program or maybe another federal program such as a 7A, SBA 7A or SBA 504. And it can help cover the costs of financial and legal and accounting service, some of the extra stuff that is just, it's expensive. And if you're a smaller business and you're trying to just get to that next step, those are necessary things that need to be paid for. But it'd be nice if you can get some support to cover that to kind of get to the next step. So that's kind of the essence of this program. So we receive the funds. We have chosen technical assistance providers, and so they will work with you in your areas, your local area, and work you through that program. And there's no loan range. So you could be a business that's looking to get, a $10,000 line of credit through the SBA, but you need, you need to get your tax filings and stuff all together. Then that's something that this funding could help you with. And, that's an extra couple dollars you don't have to spend, then it's a couple extra dollars for you. So the next page, I have put here a link to that program that we've got, and the link or the list of our technical assistance providers on here. So any one of these are organizations that you could contact for various reasons. They're all wonderful organizations that provide a ton of services, but they're specific ones that we have been able to use for our TA program. And on our website as well, and I have another link on the very first page, it will help you find a provider in your area. So depending on where you are in the state, things like that, we've got some tools to help you to kind of point you in the right direction. So above all, even though I can't directly lend to any business, if anybody contacts me and is looking for someone that can help them get started, whether it's financing or one of these organizations, I can at least point you in the right direction to get you started. And then hopefully then you guys come back to me with your lender and say, okay, now we're ready to move forward. So that's, again, very, very high overview. And I know I probably flew through that, but that is enough to get you started. And I'm going to put in the chat a copy of that PowerPoint so that you can click on direct links. The very first page of that PowerPoint has a link to our capital access page too, which talks about kind of all the programs that we've got in here. So as soon as I figure out how to attach that, I will put it on there. And I think that's it for what I have as far as just a presentation. So I think right now, if open it for questions, or if there's anything else, Kathleen, I'll have you kind of roll it from here.
Absolutely. Thank you so much. There are a few questions that came in from an attendee about whether these programs are accessible for nonprofits. Also a couple that are maybe more specific to housing industry and other program interactions. But why don't we walk through a couple of those? And then I know that there are some other questions from Roy and the Center for Employee Ownership. We want to kind of break down some more SSBCI pieces. So can nonprofits use the collateral supports available through the projects that you just described?
Yes, they can. Specifically for collateral support, actually just this past week, worked on a large multi sports complex that was like a hockey arena and indoor soccer and things like that. And it's run by a nonprofit. And we were able to help them now because we're stuck with certain industry requirements. We could only go up to $500,000 on a loan, supporting that loan, but they're a nonprofit. They're one of many nonprofits we've been able to help. So the short answer is yes, we can.
Amazing. And does this program interact with Michigan Saves? Are you from Michigan Saves, Michigan-based bank in Lansing?
I am not familiar with that. We can, all of our programs have to go directly through some type of lending. If they qualify, and I'm not sure which organization that would go through, if that was a state organization or if that was something separate. We can't ever piggyback certain programs. So I use SBA just as an example because that's probably the most known. As if, say you were going to use an SBA 7A as part of your loan package on that specific loan, you couldn't add collateral support on that specific loan. But if you can use all the different programs on multiple different loans for your whole credit package, then that would be awesome.
And then a couple other questions from the same attendee. Are programs like the ones that you shared supported by, like, could a workforce housing initiative be supported by MISHDA? Are any of the programs connected? Maybe that's similar to the piggyback question that you were just.
Yeah, MISHDA, they kind of have obviously their own separate programs. So ours don't really cross because we're not, we don't do any type of investment properties or anything like that, or, multifamily home facilities or anything like that.
And the last one that's in the chat for the time being is about being able to use some of the VSB very small technical assistance packages available for site planning, architect fees, phase 2 ESA.
Yeah, I believe that, and I believe that will fall under that umbrella of those specific needs of covering those costs that you're going to have to pay for those things in order to even apply for the credit you need. So yes, the short answer is yes, that there's a longer list other than just, kind of that, CPA attorney kind of fees.
Okay, well, thank you, David, for those questions. Those are the ones we have in our chat now. I know we have a little bit of more programming here to walk through as far as unpacking some of the SSBCI pieces. So I'll turn it over to Roy to kind of ask a few of those questions, provide some updates on the benefit and value of the program. I'll be in the chat though. If folks have more questions, please feel free to keep those coming.
Yeah, I've worked with People First, and I've got a banking background, so kind of deal with some of these. But one of the things, I guess, one of the reasons I'd like to dig in a little bit more is just to give a broader overview. Rachel did a great job digging in on the collateral support program, but Rachel, if you could, there's a couple other programs out there, funding programs, maybe just do a real high level of those programs so people know what the variety package is, of the funding available.
Yeah, one of the other ones that we use quite a bit, there's a loan guarantee program. And that is another one where we work with our partners to do that. So again, and I'm gonna, once I get these slides up here, figure out how to attach them, you'll be able to click on a finder like a CDFI is the organizations that we work with a lot of these loan guarantee programs on. And that's going to be your starting point of, okay, what are the organizations that do these programs? And within there, they will have specific agreements with us so that we can, again, it's all about kind of getting over that hump to get you financing. So for those loan guarantee programs, I'll use Northern Initiatives as just an example of a CDFI, and say you're working on a loan through Northern Initiatives, and they want to do it, everything's good, but they're just a little has any extra security they can get. We can provide them a little guarantee on that loan. Again, gets them over the hump, gets you the financing that you need. So that is one of the ones that's really rolled out quite significantly in the 2.0. So we have quite a few organizations now, and even a couple banks and credit unions now that are part of our loan guarantee program. And again, it'll be all the linked on the website to be able to help you find where to go first, or who's in your area that would be the best fit. We also do loan participations, and this, we don't do as many of these, but we do have, they definitely fill a need at certain points. So a loan participation is we can participate with again, bank, credit union, TDFI, Farm Credit Service. Say they've got a loan that they want to do with you, but maybe they're up against legal, they can only lend so much to you. We can buy a piece of that loan from them. And we can also sometimes modify the payments that come to us to give a little breathing room, maybe for a year or so, in partnership with that lender. So there could be a couple different reasons why that lender says, hey, I can't hold this whole, $1 million loan. Maybe it's something that the institution they just have requirements, will only go up to this much. It helps, again, they're still able to do that loan because we'll buy a portion from them. And that keeps the loan in place and not having to do, multiple credits and everything. So that's the other one that we use quite frequently. But the big one, collateral support, is by far our biggest one that we use. The loan guarantee program is definitely kicked off quite significantly with 2.0. And then probably loan participation after that, as far as what we use the most of. And I'm just going to drop the link because I'm still trying to figure out the slide thing, but I am going to drop the link right now while I'm talking to the landing page, at least for our website, so that you can click on a couple of these and see what I'm talking about. One other program that we have is called Capital Access Program, which is a little confusing since our group is called Capital Access. But this program is one that's actually been around for probably about 40 years within the state. And we have agreements set up with specific lending institutions around the state. And it's kind of a lot like that loan guarantee. We help provide some backing on those loans through kind of a loan loss reserve, kind of a pooling, where we take some of that risk away from the lenders. Those are ones where the lender has to have already an agreement in place with us to do that. That's the same with loan guarantee. But the nice thing is, if it's a collateral support or loan participation, you can go to any bank, you can go to any credit union, any CDFI, any approved Farm Credit Services. You don't have to do, if that bank or credit union you're talking to has never done a deal like this with us before, that's okay, because we can do them just one at a time and work through it. The other two programs, because they're more of a kind of us backing it program, those ones have specific agreements with those institutions.
One other program, a little different focus though, is the equity I think there's actually a couple within that, but the equity portion where you actually acquire a piece, a stake of the business. Maybe give a brief explanation of where that might be a fit and how that could impact.
Yes, so we, with SSBCI 2.0, and this is new, the state's always kind of done a little bit of the equity programs, kind of maybe in kind of the behind the scenes a little bit. We have a whole new venture capital area with this round of funding, and we have a specific amount of money that we've got earmarked for that venture capital program. I'm going to grab the link here and drop that in here as well. That is not something that I specifically work on, but I have obviously my direct contact to put you in contact with somebody if you think it might be a fit or something that you're looking for. This will take you to kind of these equity funding landing page, but specifically, if you scroll down to the bottom, is the SSBCI 2.0 venture capital program. And it'll talk about kind of what we're looking for, what deals we're kind of looking for to get into. And then, so if it's something that you might be interested in, and click on the link, and there should be, I believe, a contact right there on the page. But if not, again, just reach out to me directly. I can get you to the right person who can talk more to you about it.
Okay. And then you talked about the collateral support, loan guarantee. There's lenders that are already working with you on those.
Mm-hmm.
Where does somebody go to find out, is my bank doing this, or somebody in my area? Where do they go to figure out, how to start that conversation?
So the first link I sent will get you that landing page of our program information. And one of the first programs on there is the collateral support. And so we've got a fact sheet for that. We've got a fact sheet for each program. So a fast way to find that out is if you click on that fact sheet, it'll bring up like a 2-pager, give you, again, very high level information on the program. But on there, it also shows a list of financial institutions that we've recently worked with. And this isn't an all-inclusive list, but this is at least some of them going, okay, hey, there's some bigger name lenders out there. There's some smaller banks and credit unions. That's probably going to be your best starting point. But I have lots of businesses that will contact me and say, hey, I'm in this area. I don't have a commercial lender yet. I don't know which way to go. I can give you a list of a couple names in that area that have at least are familiar with our program and may be able to help you and might be able to point you in that right direction.
Okay. You talked about a couple businesses that you had worked with. I'm curious, you had one recently that you worked with, maybe a little smaller size. Just, what were their issues, and what type of funding, what type of support, and what type of impact? So certainly want to clear over the issues, but adding new jobs, being able to fulfill that sort of thing. Just a quick overview might be helpful for maybe something a smaller segment that a lot of the small businesses that we work with might appreciate. They see somebody who's getting $10 million. That's to them, that's a big business.
It's hard to relate a little bit with, I mean,
yeah.
I'm not exactly going out for $10 million myself, so I get that. So I'm thinking one of them that I did recently, which was kind of a cool little, like a meat processing butcher facility. Obviously they do a ton of, venison in the fall, or they're a big deer processing place. They do, meat, cows and pigs throughout the year. Owner gets to a point where, they're getting ready to retire. There's only a few people that work there. It's not a huge operation, and it's kind of one of those things if the kind of the person who's basically been running it decided to buy it. If they don't buy it, that place closes. Those jobs are gone. And this isn't in an area where it's always easy to run out and get another job that's comparable to that. So this was a scenario where basically the manager was buying out the person who was retiring. He wanted to sell the business, and we were able to help with all of the asset purchases of that. Because a bank or credit union might look at that and go, man, I don't know, like you have big freezers and you've got some, stuff for cutting up meat. I don't know what the value is. They're not going to value that probably super high. So that's where we can come in and go, hey, we'll put some cash up, so that person was able to, and I think that that transaction, the loan we were on was 150,000. The loan amount total would have been that. So they were able to cover maybe the goodwill portion, because again, that's the only piece that I can't touch is goodwill. So we kind of but we can work through that and adjust that. But that was one I think of most recently, is that kind of changing in the hands. And if you've got businesses that you've got somebody that's been running it forever, and if nobody wants to buy it and that business closes, unfortunately, so do those jobs. So it really can make a difference on that smaller scale of, two people's incomes right there that wouldn't be there in a year if this place closes. So
yeah, and I think you touch on a good point. Sometimes for both of us being bankers, we probably have this feel for the background of what type of asset is kind of a limited use or a limited purpose, and a lot of times it's really difficult if you're going out to get an appraisal. Somebody's valuing that what the sale is out there, but there's just not a big market for that type of asset, especially a facility. Like if you had a meat processing facility somewhere in a little it's not something that transacts every day, so it's a little more limited. So that would be a big challenge to get what the owner and seller, or the owner who sells it to the the new buyer, both think, hey, this is worth X. But from a lending standpoint or from a collateral standpoint, it's X minus Y, because it's really kind of a specific purpose. Other types of specific purpose properties, equipment that you might have financed that might kind of just give a range of things that people might think about. Oh, okay, this might be a good opportunity to do this, especially for that collateral support.
Yeah, there's another business I'm thinking logistically in my head when I start thinking of them, and this one's over in the Saginaw area of a company that makes mulch. And kind of that same thing. They wanted to expand their mulch operations, and they needed this giant mulcher thing that costs a lot of money. But again, to a lender, they're like, well, that I don't have. If I have to sell that, if I get it back and I have to sell it, what can I get out of it? To that business, that's worth a ton, because that's gonna, really jump them from, this sales up into this whole new market where they're selling to, Home Depots and Lowe's and things like that with their bagged mulch. That bagged mulch machine isn't cheap. And when I say isn't cheap, I mean, it could be, I think that one was probably $1 million, but they had other machines that were like 100,000 that need to be part of like the bagging system for it. So the business is kind of taking that leap of faith of, hey, we want to expand. It's going to cost us money to expand. But again, that value isn't there. So we were able to support that. Kind of a similar-ish example would be some manufacturing places I've had, and specifically maybe after the pandemic, they kind of had to change their focus. Maybe they're not just doing automotive. Maybe they need to branch out, and what they can do can go in more of the medical field a little bit. In order to do that, they have to buy a new line of whatever it is that makes that. Again, that's a big jump. That's a lot of, hey, this is how we think we're going to make it down the road. And for lenders, that can be scary for just a projection-based transaction. So we could come in and we have on some where we participated with the bank. So say it's a $1 million line. They're not super comfortable with lending $1 million on this line that is a whole new division for the company. So we can come in and we can purchase 49.9% of that line amount, so that the bank's not, their risk is reduced. So they're in a first, we're in a second, the risk is reduced. And we can also, with that, they're installing this new line. And the tough thing, with manufacturing and whether it's adding to your existing division or putting new ones in, it takes time to get it up, to get it running, to get the stuff made, to get it out, and to get paid. You've got some suppliers that they have to wait 9 months before they'll get paid from the initial invoice. And so we can kind of help offer some relief on the payments for our portion under a participation. So that way the bank is lowering their risk. They're good with it. Obviously, the business is able to expand, add this new division, and get a little breathing room until that, the funds start rolling in, because unfortunately, they don't come in on day one when that machine gets installed. So.
Yeah, and typically when the machines get installed, that's when activity starts, but that doesn't mean you're generating revenue. You got to get the machine aligned with what you're doing and get everything going. Now, what might be some of that relief? I would assume, say you do a participation, you might take interest only payments, so you're not requiring principal. How do you make those adjustments?
Exactly, something like that. And obviously everyone's a case by case basis, depending on what the need is and where they kind of feel like the funds will start coming in. But we can look at doing just interest only payments and deferring principal. We can in some cases waive interest for a set period of time and just do principal sometimes. And it doesn't happen very often, but we have one that I can think of that we've done, that we were able to waive payments completely for, maybe it's 3 or 6 months. Again, just to get you going off of there, to give you the breathing room before you start to get paid on all the work that you've done. So.
Okay. Maybe we should try digging in a little bit on the technical assistance side, where we have the eligible uses, financial, accounting, and legal. And of course, those are very tight terms, but maybe explore a little bit further, like financial. You think of all the planning that takes place. So within that realm, you might have appraisals, evaluations, you might have somebody's developing cash flow statements and other things. What else might be covered in that area that you've seen?
You know, and those other ones that you touched on too, you know, environmentals are not cheap, if you're looking at a property. It could be, um, what's the word I was looking for? I'm not thinking business plan, but, it's somewhat similar to a business plan where you've got to figure out, is this
Oh,
something that's going to make it,
a feasibility study.
thank you. Thank you. I'm
Yeah,
like, what's the word I'm looking for? You know,
yeah.
those aren't cheap. And sometimes a new lender is going to require that to say, is this
Okay,
going to make it here?
okay.
Yeah. And even just as simple as, you know what, you've got to get established with a CPA to get, you know, maybe your corporation filings and all that stuff. And, you know, unfortunately, all of everybody gets, you know, needs to be paid, and that can add up pretty quickly in fees like that. So yeah, it's kind of all of that, I don't know, behind the scenes stuff to get your business up and ready to kind of go to that next level.
Yeah. Be that starting or growing. Yes, you're a small business, but you really want to take a leap, or yeah, you're doing like a transition to employee ownership. All that requires a lot of background work.
Yeah.
Um, uh, Very small businesses under 10, that's pretty straightforward. The SEDI businesses, maybe dig into that a little bit, because I know uh, there's some very technical areas, and then there's rural communities, and maybe just what's
Yes.
the spirit of a SEDI business and how does this help?
Yes. So if the definition of what, you know, US Treasury gives us is um, anybody that may have had their ability to access credit reduced due to, it could be a number of things. And so some of the things that they list here, and just pulling up because it is a lengthy one. It could be because you're a member of a group that has been subjected to racial or ethnic prejudice or cultural bias, gender, maybe your veteran status, disabilities. Obviously, you know, we talked about the rural areas, things like that. Maybe your access to it is less. Um, um, a
I would think,
resident.
go ahead.
I was just gonna say, in something like maybe a resident in a community that is undergoing kind of a big economic transition, where you know you're trying to get stuff going, and there's just it's a area that needs to be rebuilt. So it's pretty broad as to, I think, what the SETI definition is. You know, and even just going by the rural, if you look at like the USDA's map of, you know, what counts as rural. I mean, a lot of Michigan falls into
Hmm.
that. And you may not even realize it and be like, oh no, you just for that because of the location of this could be part of it. But
Yeah,
it's pretty broad. It is definitely not set up to be so pigeonholed that, you know, nobody really qualifies.
yeah. So that's when I saw the maps, saw some of the other things. There's a lot of groups who would qualify on
Hmm.
pure location. I look at when people ask me, it's to me it's beyond this, but it's pretty much Mount Pleasant North. You could take a line, go across. I know there are
Yeah.
Bay City, Saginaw. There's some others, but because everything in Michigan is so rural as you go north, but other spots as well. So it's
Hmm.
really a great opportunity, and so the technical assistants can work on a lot of these, a lot for these folks. In maybe just a little bit of background of the mission here is to help people become credit worthy or have access to credit. So what might that look like? Or as you were working with some of the folks, what did that look like? How did somebody come in and doing this technical assistance help people get
Hmm.
across the line so they can get those dollars they need to, work on that project or accomplish their goals?
Hmm. um, you know, really that being that the starting point of getting some of those costs covered, um, even to the point where you can kind of go even apply for credit. You know, if you don't have your, you know, organization papers in place and your filing status in place, you can't really go to a lender and say, hey, I'd like to loan for my business, but I don't have, you know, my business paperwork set up yet. They're not going to be able to do anything. They're going to say, hey, you got to do all this legwork first. Um, you know, and what I always think with small businesses too, is so good at what you do for that, but there's so many other pieces such as accounting and legal that that not the fun stuff if that's not what you do day to day. And so that's where these can come in and help cover that to get you to the point where you're even ready to apply for credit. So I think a lot of times people think, well, I'll just walk into a bank and we can talk about it. But there's a lot of pre-work to be done. And it could be something as financial projections. Because the bank's going to say, hey, you need this piece of equipment. What is it going to do? How much is it going to cost? But how much are you going to bring in from it? And that's when you can sit down with somebody who that's their job and they can help put those projections together for you and put it in a format in which lenders like to see it. We get kind of picky on how we want to look at things. And so that it is very helpful to have it already in that format of, we know this is what they're going to ask for, and this is what they want to see.
Yeah, and lenders want to see that, okay, you've thought through this, here's where you're going to generate the revenue. Yeah, it's not just a nice new shiny piece of equipment, but here's the revenue you're going to experience, here's the expense, and here's the cash flow and how you're going to be able to pay it back. So it helps justify the decision from a banking standpoint. So that it's taking it out of a shoebox and taking it into really elevating it to a level where, okay, banks are willing to work with you there. Bankers are busy like a lot of other people. So bringing a more complete package really makes it easy for them to start investigating your application with more interest.
Yeah. And the process isn't usually with the commercial lending, it's not a super speedy process sometimes. And so anything you can do to kind of be prepared at the beginning of it will help that process. And so it's not dragging it out even farther, because now you have to go back and do this and do this. You've already got those things ready to go in front of you.
Yeah, you're working with people who know the whole list. They're not just, okay, it's just projections, it's just your numbers. And then you're always going to get additional questions. But if you can bring a more complete package, they're probably not going to dig as deep on some of those additional questions because they're already answered or close enough. So anything else you want to share? I've kind of got I guess in my mind, kind of the background. Anything else you want to share on the program? Highlights, what comes next? You're going to get additional dollars. What do you think about the program going forward? Is the timing such that the dollars are out? Do you think it's only going to last so long? You're going to be able to recycle some dollars. Where do you see this program going in the next 3 to 5 years?
Yeah. So if anything like 1.0, I have no doubt in my mind that this will be just as successful, and we will use every dollar of that to back small businesses. And then it'll come in, our success rate on 1.0 is very impressive. We had very few loans that went bad that we had to help the lenders work through. So I fully expect that this is going to continue at this pace. And then when you add in things like venture capital, which is new, and those are much bigger dollar amounts on some of those projects, that'll obviously get things out the door a little bit quicker. I think that, my hope is we use every last penny of it, that it gets out the door. And then and like I said, it recycles. And so it stays with the state of Michigan. And with 1.0, once we recycle those funds, which took just a couple years, we have been basically running those same programs since then. So we didn't get this 2.0 until 2 years ago. So really you've got 12 years that you were running off of 1.0 dollars just over and over again. And I fully expect it to be the same. I think our biggest hurdle in my group is letting people know that this is out there. The advertisements, the marketing of it, I think is my biggest hurdle, because we're a small group, and we try to get in front of as many businesses and lenders that we can. And you may run across a lender that's like, I've never heard of this before. And that's where I'm like, here is my contact information, give us a call. I'll be happy to walk through it. And if you're looking for a place to start, just to get a hold of me as well, because I can at least point you in the right direction, because we have worked with lenders throughout the whole state. We do have quite a few deals we do in the UP even. So if they're looking for something up there may not be as many options, but we've got some up there as well to do. But I think just knowing that it's there and that's an option, is the biggest piece that I try to have everybody take away is knowing about this program.
Yeah, I think it's a great opportunity for everybody who sees this session today or down the road, tell people about it, because that is the biggest thing. If a business owner doesn't know, or the business advisor doesn't know, the banker doesn't know, they're not going to pursue the program because they don't know. And so it is really building awareness. So we're very happy to be supportive. Our group is happy to be supportive of getting the message out.
We appreciate it. We
Yep.
appreciate it.
Absolutely. And great opportunities for so many different businesses at so many different scales. I think the last piece that you all touched on, it segues really nicely into an additional question that we had in our chat, which is really about deciphering which program makes the most sense for the business. And I know, Rachel, you had mentioned there are some fact sheets per program on the landing page that people can dive through, but is there any kind of like one pager or chart or flow system that really helps people identify where to get started in any of those programs?
Not that we have yet. It's funny. That's actually something we've discussed, of putting kind of a one pager. SBA has it on their programs. You might be able to find sometimes, and we're, getting to that point. But we don't have anything yet. I just have the link with the one pagers. But really, I think the thought process is what's the need, what's the hurdle trying to get over, is just knowing, hey, I don't have anything to back this loan. It's a really small loan. So do I just need like a CDFI that's going to maybe provide a guarantee on it? So it kind of is thinking about what's the need and what's that hurdle we're trying to get over. But at least the landing page will give you some ideas with the fact sheets to be able to just click on them. But that is something we've actually talked about, is kind of putting together a one-page matrix so that you can kind of go through. Now that we've got these programs up and running and established, we can put it in ink and put it out there.
Yeah, I can think of one from a banking standpoint where somebody says, yeah, we'd love to do the deal, but we just don't have enough, collateral. So the thing is, each case will be, there'll be circumstances for each case that'll probably dictate it. Learn about the programs and at least ask, and then Rachel can direct you in one way, or any of the technical assistance providers can help direct folks in the right, the right way to say, maybe I qualify for two, but two of these programs, what's the best program based on my circumstances? So it's going to take some investigation, but you just kind of work through with it and ask the right people, and you'll be in good shape.
Great. It looks like another question just popped through. Among your TA providers, do you have a vetted list of consultants who can support the analysis and building of capital stacks?
I'm sorry, do the TA providers have a list of?
Yeah, is there a vetted list of preferred vendors for analysis? And then they asked also
Gotcha.
specifically building of capital stacks.
Not that I'm aware of. It probably is going to depend from each TA provider. They're probably more familiar with, like, hey, we can direct you to this because we worked with this, attorney's office, or CPA firm, things like that. But I don't specifically have a list. That would be a great question to talk to that TA provider in their area.
And I think a lot of it, since this is a new opportunity we're exploring, you're probably going to run into, we've got all these other hurdles cleared, but we got a big one here. So we're going to investigate and kind of do the outreach that we need to kind of bring in more team players. That's one of the things we're finding in our group that's focused on employee ownership, is there are some areas of expertise we're going to need to reach to the outside and bring in. And we're just going to have to do it. So, but that's part of the process. If we get you 3/4 of the way there, or 80% of the way there, that last 20% is a lot less challenging.
Yeah, absolutely. Well, we have just a few more minutes, so if other questions pop up, we certainly could address another one or two. But Ray, that's a really nice transition to for our next gathering. Is going to be a week from today at 1 o'clock. We'd love for you to join us. We will be diving in deeper into the model that our team, the folks I mentioned at the beginning, have around employee ownership, finding valuable succession planning models for businesses who are interested in accessing these capital opportunities, and the different technical supports that are going to be available through that, whether they're legal, whether they are governance-based, structural-based, right? We will be diving into how we're offering that with our collaborative partners. So we'd love to have you. The link for that is in the chat, and we'll certainly be following up with the slides today and with information to join us next time. I'll also share it just briefly before we go. Bear with me, moving screens. That you can find more information on our capital access program here. Feel free to scan that QR code if you want to jump in. Once you share a little bit of information with us, like Rachel and Roy mentioned, there are a couple of indicators that they're looking for through the program, very small businesses, that SEDI indicator as well. So we're just asking for a little bit of detail here to get us started. You'll be connected with our community engagement manager who will help to unpack the needs that you have and then plug you into the resources and technical supports available through our network. So feel free to take advantage of that. We'd love to see that information come through and help you with where you are in this process. You can also email us at info@peoplefirstacademy.org, and we're happy to help with that as well. That would be the best next step for folks who are ready to jump in today and have more questions about the SSBCI program and ways to do that through, like Roy mentioned, we have an employee ownership focus, but can certainly be a support in accessing the other networks who are participating in these capital access programs.
Yeah, with any of the TA groups, one of the things that all of us are doing, if it's not a particular fit for us, we can refer people over to the other group, the most appropriate group. So however you enter this overall portal, we're going to make sure you get to the right resources to accomplish your goals if possible.
Great. I am not seeing any other new questions come through yet. So if you think of things after our time today or even outside of our next week timeframe, we would still love to hear from you. Please pass us along. We can connect you to Rachel, to Roy, to others who are participating in the program. We'll be happy to pass that. Please join us next time. We would love to see you, and we will be following up with these resources in a few different formats. So look out from us on that. But thank you, Roy and Rachel, for joining and for sharing all this great information with us today. We'll see you next
You're
time.
welcome.
Absolutely.
All right. Bye, everyone.